Buying older second-hand equipment may seem like the most cost-effective solution for your business, but your lender might have other ideas. Here's why. Hey everyone, Louis Deep here from Odin Finance, helping you with all your asset finance needs. Look, there's been a great deal of pressure on our import market over the last few years. This has put upward pressure on the value of assets. And so we're seeing a number of business owners turn to the second-hand market and rolling over their existing equipment and machinery rather than buying new ones. But if you ever look to acquire older assets or vehicles to keep your business operating, you know that the major banks prefer financing new stock, and their preference could actually end up costing you more in the long run. So in today's video, I want to show you why your lender might charge you up to 2% more for used equipment. Stay tuned. Before we start, you should know that this video must not be construed as professional or financial advice. In particular, you should seek independent financial guidance from a professional who can advise you on the best ways to proceed in your personal circumstances. Okay, let's dive straight in. Most mainstream lenders generally have a max asset age they will consider funding. Some of them have a term in their policies called end of term policy, or EOT. This is the maximum term the lender will consider based on the age of the asset. For example, if a lender has a 10-year end of term policy and you're looking to purchase a 2015 vehicle for your business, the max term they'll consider is 3 years. This is pretty simple to work out. All you have to do is minus how old the car is from the end of term policy. In this case, the car is already 7 years old and the lender's maximum term is 10 years. So that leaves you with 3 years remaining to pay off the asset. Some lenders will even have a cap on the asset age and tell you that you're only willing to fund assets that are a maximum of 5 years old. If the asset is older than 15 years old, you find that your options with the major lenders are pretty slim. But that doesn't mean you're a dead end. There are several second-tier lenders who will fill this space and are happy to provide finance against older assets, but it will come at a price because it's riskier for them to be financing older equipment. Obviously, the resale value of the asset is lower, and there is generally a higher chance of the equipment having mechanical issues as it gets older. So if you're buying brand new assets, chances are you're gonna get a better interest rate for the loan compared to if you're buying a second-hand asset. With certain lenders, the variation in the interest rates can be pretty significant. For example, you could secure finance for a new asset at an interest rate of 7.5%. That same lender is happy to offer finance for an older asset that is anywhere between 15 and 25 years old, but they're gonna give you the finance at an interest rate of 9.75%. Of course, there are a whole host of other factors that could influence your interest rate, but you need to consider that the age of your asset is one of those factors. So, in summary, you'll need to work out if it makes financial sense to go the second-hand route. You'll also have to establish if there's a lender who's willing to give you finance for older equipment. If not, it might be easier and more cost-effective in the long run if you'd rather go with a new purchase. I hope you found these insights helpful for your decision-making process. If you're considering a second-hand asset for your business, then it's worth speaking to a broker like us at Odin Finance to help you understand what your options are. Also remember to hit the subscribe button and stay tuned for more tips about commercial loans and asset finance to help with your business growth. See you next time.